All right, it has been a while since I've used the OBS layout. We took a trade today based off of the higher time frame plays and using a lot of conviction and a lot of narrative. Now, full transparency, although it's a full take profit trade position of 272 pips win, I chickened out and only secured profits halfway through when we had a 15-minute candle closure with barely a top wick. So, first things first is I want to run over my systems. I want to run over what happened with setting it up, the analysis, the liquidity areas, the mirror and price action, and most importantly is the narrative. So based on my 1 hour closure, there was no bottom wick. This is the most obvious, the clearest sign to me that there is going to be a continuation up. In the trading session with the 4 hour candle open, we weren't entirely sure what price would do. You came up for the top wick, you started coming down, and we were actually expecting price to finish out the range. We were really switching between the buys and the sells based off where the ranges were and the key time frame closures. So when price action gave me an hour closure like this, and 3 p.m. opened up, 4 p.m. opened up, you came straight up. We're expecting price to just continue the rally up. So the 1 hour gave me a very key indication. But then again, we had the 4 hour to kind of battle with and to mitigate this. So the 4 hour already had its highs and lows, and the previous ones show lack of momentum to the upside, which I needed to mitigate, which as you can see here, you typically have body of the candle closing below the previous wick highs, indicate a loss of momentum for price action to have a higher probability to give you closures below the range. So the way you mitigate the 4 hour is looking at the lower time frame. What is the 1 hour telling you? Okay, 1 hour is telling you you've got support. So now you look at the 30. 30 tells you exactly the same thing. We'll typically see a very strong drive into a positive direction from this fake out. So the 30-minute and the hour gave a fake out as a confirmation to retest the liquidity area. This is my liquidity area. We entered on a 15-minute open without a closure. So this is an open 15 candle. And typically what I'd do is I'd wait for a pullback. I'd wait for, okay, confirm that this is a fake out. So you'd have a wick. The bottom wick entry is where I'll be looking in. This is such a good trade opportunity. I did not necessarily need to wait for that. I understood when I looked at the charts, if you have an hour that looks very bullish, price action is going to start to come up to push through towards 5017. 30-minute tells you exactly the same story. 15 is probably going to close you up here at 5006. This already gives me intention to tell me price action will most likely drive on this 15 candle, if not push all the way through to your TP. So this is what gave me the confidence to actually enter the position based off of a mid open candle on the 15. I didn't have to wait for that closure. We looked at the five. I'm telling myself, okay, you've got a 5 minute candle closing you bullish doji, technically indecisive. I'd probably need to wait for a break of the lows. So we didn't get the break of the lows. However, if you look at the 1 minute time frame, what's the 1 minute telling you? 1 minute is telling you, okay, you're expecting a reversal. Price action then cancels the reversal because price is still respecting the range. Price creates you a high. So what are we looking at? We're looking at range 2. Range 2 means you're going to get the advantage point set. This is your risk off area at 994. Your entry point is going to be here at 90, and your stop loss is the range below, which you shouldn't start retesting. So with that knowledge, I can look for buying opportunities. So when we had that 1 minute candle closure at 10, when we had the open, you've got the 1 minute telling you price action is actually ready to start driving up. It might not be at this specific place, but price action is preparing to create bullish structure upwards. And that's why we're looking at an in. So when we got the bottom wick on 4:10 p.m., that's the open of the 5 minute candle. We got in on the wick entry. Price action validated the area here at 990, and we got into the buy. It lingered around for a little bit. I won't lie, I was kind of shitting bricks for just a little bit. And price action did exactly what I expected. You had the risk off area right here towards 994. It put you about a 43 pips into profits, and that was a really phenomenal way to kind of push price all the way up. We just utilized all of the momentum, everything from the higher time frames kind of just aligned for me. And I'm really super grateful for this position. We really tried very hard for it. So entered on the 15 minute without a closure because I knew that the 15 minute should push for the 30 minute before it closes, and when it does close, it will not need to retest the lows at 4990 again. So I waited for the 5 minute to give me a closure above. The 1 minute entry was respecting support area. The advantage area above recent highs, which was the 1 minute range, that's the resistance area at 994, and the levels were all set to mirror previous price action. So if we go back and we understand what previous price action is, you've got the same liquidity area. Price action liquidates around about the same areas. You get the retest. Price action gets you in at 990. So you're looking at stops below the range. You're looking at validation area. You're looking at advantage point, and boom, you're replicating price action. And actually, price action is expected to push all the way up towards 5037. But I only want to catch a small piece of the market. I only want to go for the most recent range, which is the top of this. And it was a good job that we did. We had a small pullback, and then price action would have tapped you out at 5037. So it's exactly what we expected on price action. So I'm very happy with the trade entry. I'm very happy with the trade management. The only thing is that 15-minute time frame management. Now I understand dynamic management. I understand why I exited the trade position. Look at the closure on the 15. That is very typical to tell me there is a higher probability of price action going to come back down to your break-even levels, to maybe even come further down to break the lows at 976, for then price to just plummet all the way down to refill. That's a rebreak in a 4 hour. So for me, and my planning, I understood that the scenario now has changed the probability. I can also argue the fact that I am risk free, and I am very much pro towards leaving my level set. I only have three potential outcomes. It is either going to be a full stop loss, or a break even when we have risk off, or a full take profit. And I do not want to hinder the progression of my trades, because every single time that I'm cutting a trade short means that my data, the win rate, the probabilities, is all going out the window, because you're now changing what your risk to reward is. You're changing all of these variables that help you have that consistency. And this is, again, something that I'm continuing to improve on. It's one of the February expectations. It's something that we're mid-February now, and I expect myself to continue holding this standard, right? You're risk free off the table. If this thing comes back to break even, it comes back down to break even. That is now a break even trade in your books, understanding that this wasn't quite right in terms of the entry validation. And if you get stopped at break even and that's a bottom wick entry, you can look again. But again, if you came down, it doesn't make too much sense to take a buy, because the 15-minute close with no top wick. So I'm grateful for today. It's a plus 84 pip win, but it would have been a 272 pip win had I just had the balls to just stick it out and understand that whatever happens, happens. You're risk free off the table, and anything that just, stops you out, or goes to full TP, this is part of the game. This is what makes your idea pay. And you have to just have the mental psychology and the discipline to just stay within those three scenarios and not say, I've got no more balls to hold, I'm just going to close out here. But it was absolutely fantastic trading day, absolutely fantastic breakdown, amazing analysis, and fantastic execution.